And that's why I'm planning to go all in on Bitcoin. It's no question that the global markets are in absolute panic mode right now. Current market sentiment is now deep in extreme fear territory. Michael Saylor of MicroStrategy was officially read as of yesterday on their massive holdings of 129,000 Bitcoins at an average price of 30.7K. Popular stablecoin UST has officially depegged itself from the US dollar, and Bitcoin has been in a complete free fall since November 2021. With interest rates rising in an attempt to combat rapid inflation, there's many reasons that investors are looking to pull their money out of speculative investments. And in this video, I'm going to give 2 key reasons why Bitcoin is selling off, as well as tell you where I am planning to buy the dip hard. So first, it's important to really understand the context behind the price action. Over my 6 years as a trader, I've refined my skills to primarily surround technical analysis and trader psychology. So I've become pretty good at being able to look at a chart and understand what other traders are doing in them. So let's go to the beginning of this rally, which started with the break over the previous all-time highs set in 2018 near 20,000. This rally was after the insane COVID rally, as the V-shaped recovery in the S&P 500 kicked off a massive buying frenzy as Powell decided it was a good idea to print 80% of all US dollars in existence. This drove the prices of all assets, including Bitcoin, to the moon, as everyone had stimmies and they were just stuck at home doing literally nothing. They wanted to put their money to work and gamble a bit, and they did. This initial spike was insane and drove Bitcoin to that 60K price that we saw in March 2021. And from there, the frenzy finally started to cool off as people started to take their profits. What's important to understand, though, is that not everyone was a part of this rally, and a lot of investors were patiently waiting for what's called the retest of previous resistance as new support. However, as it started to retest 30 grand in the summer of 2021, there was simply too many big banks and funds that were demanded by their clients to start increasing exposure to Bitcoin. And this demand increased more and more. And the order book in Bitcoin surged immensely, and there was simply too much big money looking to get involved at that time. Everyone patiently waiting for the 20 grand mark was left behind as banks started bidding each other up in order to increase their exposure, and Bitcoin started to go for another rally. This was pretty much confirmed by Morgan Stanley in September 30th when they announced that they finally had a $300 million position in the popular Grayscale Bitcoin Trust. But the thing about this fund money coming in is that they are not diehard hashtag hold like a majority of retail. In fact, the funds knew that retail sitting on the sidelines would chase the news of funds increasing their exposure to Bitcoin and buy into the breakout, which gave the funds the liquidity needed to offload their positions for a quick but insanely profitable flip. So as Bitcoin broke out into new highs in October 21, dumb retail chased into this heavily while funds liquidated their positions, leaving mainly retail traders now holding the bag. When it failed to hold that breakout, the panic has now started. So now it should be pretty clear that the majority of current crypto holders are retail traders who likely chased the highs set in summer 2021. And since then, it's been largely short-term retail traders who have been attempting to prop up and buy up all of these dips, which is obviously a useless effort. And as crypto advertisements started to flood the world at events like the Super Bowl, UFC, F1, it's just bringing more and more dumb retail traders who are really not prepared for the situation of Bitcoin falling even further, especially with really scummy ads like crypto's Fortune Favors the Brave, which released on October 28th, 2021, implying that you'll only make money in crypto if you take the risk now. Not hard to imagine that a lot of new investors have entered the crypto space in just the last year alone. This chart posted by glassnode.com shows that over 82% of short-term held coins are at a loss. And this was posted a couple months ago while prices were still in the $40,000 area. You can only imagine what this number is now. I posted a poll on my Instagram feed asking if people were red or green on their crypto investments, and around 63% of people said that they were red. A similar graph posted in an article by bitcoinmagazine.com shows us that back when the price of Bitcoin was at $42,235, the average short-term holder's entry was at 49.9 grand, while the average long-term holder was priced in at 17.6K. Further giving us evidence that a ton of new retailers holding the bag at a massive high price, and the further that the price drops, the more that they'll be likely to panic sell, especially since most people are just broke right now and can't afford to lose any more money. Now, that longer term holder price of 17K is quite interesting though, and that leads us to the last point of this video, which is exactly where I am planning to start heavily getting involved with Bitcoin and other altcoins once again. So going back to the first part of this video and the concept of previous resistance as new support, that is the strategy that has dictated my trading in the stock market for the last 6 years and the strategy that I have found the most success with. And this type of strategy doesn't only work in the stock market, since it largely deals with the psychology of how traders react to prices. Since crypto trading decisions are primarily fueled by price and price alone, this strategy tends to work extremely well in this space as well. And that's why I'm planning to go all in on Bitcoin at 20K. More specifically, I am starting to increase my exposure as we fall into this bear trap zone between 30K and 20K. Lots of retail will panic as it falls under this summer support because they just cannot stomach further losses, while the patient investors who have been waiting all of this time for 20K are salivating at the potential returns that can come from here. Obviously, nothing is guaranteed, but I can personally say that I am one of those patient investors who have been waiting for the 20K retest ever since Bitcoin first broke out during COVID. And now I see the opportunity finally coming to life. The only question to ask yourself is if you see the opportunity as well. So hopefully this video gives you a bit more clarity, since I know everyone is in extreme panic mode right now. It's important to have a plan when it comes to any type of investing. And this video broke down my thesis and my plan going forward with Bitcoin as we continue to crash. If you want to learn more about my style of trading, I just launched a free 1-hour masterclass that will help give you the actionable steps that you need to take in order to become a consistently profitable trader. And these are the same steps that all other traders are hiding from you. I plan to make another video like this detailing the altcoins that I'm planning to buy during this crash. So make sure to subscribe for that. Like the video for the YouTube algo gods, and let me know your thoughts about this crash in the comments down below if you have any.